Elga Bartsch, she's the chief European economist for Morgan Stanley. Elga, thank you so much for talking to us. There's so much concern here in Brussels that actually they can't really do anything, these leaders, to stem the crisis and surely to reassure markets. What would you ask them today to do to give really a definite answer to all these questions?
Well, I think eventually you need to get to the heart of the crisis, which I think has two main elements. One is the fiscal deficits, and the other element is the financial stability. And I think key is to recapitalize the banking system in a very proactive way, so that the vicious circle between concerns about the stability of sovereign countries and the financial system can be broken.
But what exactly do we need to be put in place? Because there was talk about possibly going through budget cuts here in the European Union, getting a pre-approval before it gets passed on to Parliament. A lot of the countries say they don't want that. So how do you make sure that governance is stricter and that they keep an eye on each other?
Yeah, I think one of the challenges with the Stability and Growth Pact is that it's indeed a peer review process, and that has failed, and largely because Germany and France dismantled the peer review process in 2004. So I think personally I would be very much in favor of seeing an independent institution brought into this process, overseeing some of this review process, an institution that has more independence than the European Commission on this, and then somewhat more automatism in the sanction mechanism as well. But I think we're actually in Europe now making pretty good progress on the fiscal consolidation side. A lot of countries have really tabled ambitious plans and they're pushing them through Parliament. So I'm not so worried on this side of the story. I'm more worried about the financial stability side.
How worried are you actually that Spain will have to tap into a lifeline, some kind of credit line?
Well, I think it will really depend on a number of key events. One is whether the labour market reform can go through Parliament. It will depend on what the result of the stress test and the need for recapitalization of the banking system is, and obviously how today's auctions will go or have gone, and whether the market will continue to fund them. So,
Elga, on these stress tests, do you actually believe that they have to be published by everyone? It looks like Spain wants to, but we have resistance from some countries.
Indeed, we have. And I think it's not just the stress test that is sort of the panacea here. What you actually need is the combination of publishing the information and acting on them by recapitalizing the banks that look somewhat thinly capitalized in any stress scenario, either with public money or with money raised on the capital markets. And this is, I think, the key part of the story is the recapitalization. You can only show the information on a bank-by-bank basis if you have the recapitalization plans in place. And we do have many recapitalization funds in Europe, but they haven't been used aggressively.
But Elga, this would actually have to be on a European level, these recapitalization plans?
Well, for some of the pan-European banking institutions, I think it would be advisable to coordinate on a pan-European basis, yes.
All right, Elga Bartsch, thank you so much for joining us today.